Earlier this week, we talked with UNL beef cattle nutritionist Jim MacDonald about putting weight on animals in the feedlot. When we last talked with Jim about this issue in November 2012, Nebraska and many other states were coming off low harvest numbers due to a record drought. That wasn't the case this year, but now higher calf prices could be squeezing margins.
Feedlot industry is always a break-even industry, and the reason that it's a break-even industry is because when feed prices come down, feedlots have an incentive to go pay more for feeder calves. And so that's the dynamic that's changed over the last couple years. As corn prices moderated, we're spending more money for feeder calves. You know, if you're going to purchase a 600 or 650 pound calf coming into the feedlot now, you're looking at a $1,000 to $1,100 investment right now, which is substantially greater than what it's been in the past.
And those feeder calf prices have been high for a few months now, right?
Yes, and probably will remain high. You know, one of the outcomes of that drought is we liquidated a lot of cows. And so feeder calf supply has been tight and will probably continue to be tight. It's quite a large investment to replace that female for the ranch as well. And so we'll see how this all plays out, but feeder calf prices will probably remain high.
So last time we talked, we had looked at, in relation to feed prices, how long do you want to keep the cow in the feed lot? With these high calf prices, what do you look at to find if you can make the money back there?
So really, the principle during high feed prices is what's going on with carcass feed efficiency. If we're selling a carcass rather than selling a live animal to the packing plant, we want to focus on carcass feed efficiency rather than on live animal feed efficiency. The principle when you're paying a lot of money for a feeder calf is distributing that initial price that you paid for the feeder calf over more carcass weight. And so if you're looking at about a $200 a hundredweight outcome this spring, I don't know exactly where it'll be, but futures would indicate that that's the area that that it's headed. Divide your initial $1,000 to $1,100 by an 850 pound carcass versus a 1,000 pound carcass, and you've changed your feeding margin by about $20 a hundredweight on that carcass.
Does the same thing apply here as it did last time, where you're better served feeding out rather than selling early and cutting losses?
So the only difference would be if you're selling on a live basis rather than on a carcass basis. When feed prices are really high, there is incentive to sell early. If corn prices are relatively moderate, but feeder calf prices are high like they are now, in both cases, if you're selling live or if you're selling in the carcass, you want to go ahead and feed them out until you start running into substantial discounts, which has also changed because the beef market is also tight, and so discounts for heavyweight carcasses have diminished or almost gone away completely in many cases. And so really it's when you start getting into significant discounts for yield grade 4 and 5 carcasses.
How does the efficiency of gain change towards the end of the cycle in the feedlot?
So in both cases, if you're looking at what's going on in the carcass and if you're looking at what's going on in the animal, feed efficiency is going down at the end of the feeding period as they're putting on fat. The difference is that 90% of every pound that you put on a live animal is transferred directly to the carcass at the end of the feeding period. And so feed efficiency isn't declining at as rapid of a rate on the carcass as what's going on in the live animal. We tend to think in terms of, well, there's two issues that catch us sometimes. First, we tend to think in terms of what's going on with the live animal and we're selling carcass. So we need to change that thought process and start thinking about what's going on in the carcass. The second issue is at the end of the feeding, we tend to think in terms of what's going on to animal performance on average throughout the feeding period because we know their performance at the start and we know what's going on at the end, so we can calculate the average feeding performance. What we really want to get to is daily incremental performance so that we can predict at the end of the feeding period exactly what day should they be marketed when it's no longer profitable to put on an additional pound. That's about impossible for a feedlot to do. But keeping in mind the principles of 90% of every pound of gain is being transferred directly to the carcass allows us to estimate more closely when optimal marketing is.
At the beginning, you said the feedlot is a break-even industry. There are lower feed costs, but calves are really high-priced. Is there some profit to be made here? Obviously, this is a speculation and estimation depending on what happens in the market.
You know, I'm pretty bullish on the beef industry as a whole. The feedlot industry is probably going to be break-even in the short term. Depends on what the consumer is willing to pay for the beef prices. But I think one thing that remains constant is that consumers like beef. They like our product, and it's in short supply. And so I think, especially if you've got cows right now, you're going to be sitting in a very good position. Feedlot industry, I think there's going to be winners and losers, but the outlook here this year should be more favorable than it has in the last couple.